He wants credit card companies to cap interest rates at 10% for 1 year or face consequences. Now, as you can imagine, a company like American Express moving down quite a bit on the news because 10% is not how these guys make money.
I think there's a lot of components here. Access to credit will probably be cut. Rewards points will no longer be subsidized by the people paying higher interest rates. There's a lot of confusion here. I think, given January 20th is Trump's 1-year anniversary, he's basically trying to use this as a kind of like additional data point for voters to say, hey, ahead of the midterms, I'm on your side. Here's what I'm doing for you. And I think in the long term, it'll have a lot of negative or unforeseen consequences for consumer credit availability. But in the short term, the market is taking this at face value. Capital One was down 10%. It was leading the decline. Like you said, American Express, Visa, Mastercard were all down. I think the real debate now is like, how much do they dip before you buy them back? If you believe that this will not either get put into practice or it's just not something that's going to be super relevant, 60, 90, 120 days from now. So that's the debate that's happening on the streams. I don't really have a strong view either way. Like Capital One was already up 30% in the last 3 or 4 months. So you're buying at a discount after today, but not really because it's still elevated. So really depends. I think traders are taking advantage of the volatility, but investors are still kind of waiting for more information on this.